Welcome to this tutorial where I will be breaking down a common yet crucial topic in financial accounting, that is share capital transactions, specifically focusing on the issuance of shares with oversubscription. We will be tackling a practical problem similar to what you might encounter in your exams or real world scenarios. Illustrate how to accurately record these transactions in the ledger accounts, and by the end of this session you will have a clear understanding of the journal entries and the key accounts involved in managing share applications, allotments, and calls, including how to handle excess application money. This is Senior Hannington, your accounting tutor. KTL has a nominal share value of shillings 20 million, comprising 200,000 ordinary shares of shillings 100 each. The whole of the capital was issued at par on the following terms: payable on application, shillings 15, payable on allotment, shillings 20, first call, shillings 30, second call, shillings 35. Applications were received for 250,000 ordinary shares, and it was decided to allot the shares on the basis of 4 for every 5 of which application had been made. The balance of the application money was applied to the allotment. No cash funded. The balance of the allotment money is paid in full by all the members required. Show the ledger account recording all the above transactions. So the company is KT Ltd. It has a nominal share value of 20 million. They have 200,000 ordinary shares, and the par value of each share is 100. The payment schedule is given. On application, they pay 15. On allotment, they pay 20. On first call, it's 30. And then on the second call, it is 35. So when you try to add up this will give you 100. Okay, this will give you 100. Yeah, this will give you 100. This will give us shillings 100. This 100, of course, will match with the par value of each share, as we have been told. The par value of each share is shillings 100, as we have it there. So they have received the money for 250,000 ordinary shares. Applications are received. We are for 250,000 ordinary shares, meaning that there is oversubscription. Why? Because the company has 200,000 ordinary shares. So we have an oversubscription here. The allotment basis is very clear. That is 4 for every 5 shares applied for, meaning that there is some excess application money received, and this is going to be applied to allotment. No cash is refunded. The allotment money was fully paid by all members. So you are required to show the ledger account recording all the above transactions. Okay, so let's see how to do this. The first account I'm going to prepare, I will prepare the bank account first. I'm going to be explaining this bank account. So I have my bank account here. These amounts are in shillings. Now, what do we enter in this bank account? We see a company which has issued out shares. But there are two key terms which I want to first explain before we go into the entries. Now, the first key term is application. What is application? Now, when the company is issuing shares, there is what we call the application stage. Now, the application stage, that's when the public or the potential investors express their interests in buying a company's shares. So when the company decides to raise capital by issuing shares, it typically releases a document called a prospectus or as the offer documents. This document contains all the necessary information about the company, the share issue, that's the number of shares, the price per share, the payment schedule, and so on. So those investors who wish to purchase these shares will then fill out an application form and submit it to the company along with the required application money. So that is application. Then when it comes to allotment, now that's the process by which the company formally accepts the offers from the applicants and allocates shares to them. So allotment is the company's acceptance of the investor's offer to buy the shares. So as the shares are allotted, the applicants become shareholders of the company. Now, they have received money on application. So on the debit of the bank account, I write application. Application. They have received money for 250,000 application. But remember, on application, they pay shillings 15, as you can see here. They on application shillings 15. So 15 times 250,000, this gives you 3,750,000. That's the money received on application. Payable on allotment, we have 20 shillings. So on allotment, still money is received, but how much is received on allotment? On allotment, the company is going to receive 20,000. Sorry, it's going to receive shillings 20 for each share. They are going to receive shillings 20 for each share. But they have allotted 4 for every 5 of which application has been made. The balance of the application money was applied to the allotment. No cash was refunded. So the allotment, they are going to allot 200,000 shares. Okay, they are going to allot the shares on the basis of 4 for every 5 of which application has been made. When you get 4 over 5 times 250,000, you get the 200,000 shares, which are the number of shares they have. So 200,000 shares at a price of shillings 20, this gives you 4 million. But of course, I have to less the excess. Less excess application. Less excess application money received. So the excess application money received is for the 50,000 applications. And on application each year, each share is shillings 15. So meaning that the company received 750,000 excess. So meaning that on allotment, we are going to record 3 to 50,000. That is 3,250,000. That's the allotment money. It is 4 million, but of course we have to less the application money is received because they have said that no cash was refunded. The application money was applied to the allotment. So that's what we have so far. So they are going to issue out the 200,000 shares because that's the number of shares they have. The excess is not going to be refunded, but it's going to be applied to the allotment. Then we see the first call and then the second call. Remember, we are issuing out 200,000 shares. So first call, money is going to be received. First call. So we debit the bank account. First call, we have our 200,000 shares, but each shilling start. That's on first call. This gives us 60 millions. Then second call, same shares, 200,000 shares at shillings how much? At shillings 35. That's on second call, and this gives us 7 millions. You can see first call, second call, money is received for 200,000 shares, so that money is going to be debited in the business's bank account. That's it. Also, since there is no any application money, excess application money received that is refunded to the applicants, you close your bank account, you balance it. So we get a balance carried down. This is 3,750,000, 3,150,000, 6 million, 7 million. This is around 20 million. So that's the bank account. The other account I can prepare the application and allotment account. I've combined these two accounts, but sometimes you can separate them still. May find application account and then the allotment account. Here I've combined them. So you just complete double entry here. You see your bank account has been credited, has been debited with the application money is received and allotment money is received. Come and credit this account with the monies. So bank, that's application, 3,750,000 received. Then still bank on allotment, that is 3,250,000. Can balance this account, and the balancing figure is going to be taken to the ordinary share capital account, and that is 7 million. That is 7. That is 7 millions. That's the application and allotment account. So now we have the bank account, you have the application allotment account. Then we can also now come up with the first call account and then the second call. So first call account, So first call account, we'll look at the first call account. Money has been received and it has been debited in the bank account. So we come and credit the first call account with the money is received. So bank, first call, that is 6 millions. That's 6 millions first call. Now this money is going to be transferred to the ordinary share capital. That is still 6 millions. That's first call. Then second call, you still create another account for the second call. Second call count. Money was received and debited in the bank account. So complete double entry. Come and credit your second call bank. That is 7 million. Ordinary share capital to be debited, to be credited with 7M. So first call, second call, we have that. You can also now prepare your ordinary share capital account. Ordinary share capital account. This account records the par value of the shares that have been issued out. So ordinary share capital account, we credit it with the application and allotment monies. So you see ordinary share capital in the application allotment account, we debited this account with the ordinary share capital. So in the ordinary share capital account, we are going to credit this account with application and allotment. Application and allotment, that's how much? That's 7 millions. That's 7 millions. Then we also have the first call. First call. First call is how much? First call is 6 millions. And then we also have the second call. Also have the second call. Second call is 7M. So that's it all. What you have to get is now your balance carried down, which is 7 million, 7 million, 6 million, that is 20 millions. Remember, your ordinary share capital has a par value. The shares, the 20,000 shares have a par value of 20 millions. So this is the 20M. You can see from question up here. They have a nominal share value of shillings 20 million comprised of 200,000 ordinary shares of shillings 100 each. So our share capital account, we see a balance of 20 millions. You see a balance of 20. You see a balance of 20. Yeah, 20 millions. It's a balance of 20 millions. The ordinary share capital account. It's a balance of 20 millions. Now you may ask, what do they mean by first call, second call? When I talk about the first call, that is the first installment of the share price that a company demands from its shareholders after the application and allotment money has been collected. So they will always demand first installment. So when you see first call, just know that that's the first installment of the share price that a company demands from its shareholders. Once the shares have been allotted and the company needs more capital, the board will pass a resolution sometimes to make the first make the first call a specific amount per share. Okay. Then the second call, that is now the next installment of the share price that is demanded by the company after the first call has been made and collected. So that is it. If the par value of the share is still not fully paid after the first call, the company can make subsequent calls, that is second call or even third call, and even you may find that there is also a final There is also a final call until the entire par value of the allotted shares is collected. So the ordinary share capital, we have that. Then which other accounts can I prepare now? I can also ordinary share capital, I have that, second call, first call. I have the application and allotment account, and then the bank account. Okay, let me also prepare for you the extract of the statement of financial position or the balance sheet extract. Balance sheet extract. Now, in the balance sheet extract, of course, going to show the current assets. Under the current assets, we have bank. Under the current assets, we have bank, and we know that our bank account balance is 20 million. So you take that bank account balance in the balance sheet. That's 20M. Then in the equity section, equity, we have our ordinary share capital at a balance of 20 what? Balance of 20. Okay, ordinary share capital as the account has a balance of 20, has a balance of 20 million. So that's it. We have seen how to account for the issuance of what? How to account for the issuance of shares. So we have seen the process of accounting for share capital from the initial applications and handling the oversubscriptions, right to the first call and then to the second call. And then we have also seen how to the accounts which you can come up with. That's the bank, the share application and allotment account, the first call account, the second call account, and then share capital account. Finally, we have also come up with the balance sheet extract. So mastering these entries, of course, is very fundamental for anyone working in corporate finance or aiming to excel in the accounting studies. You have to practice. Don't hesitate to visit this problem and apply these principles to similar scenarios. Thank you for watching. This is Senior Huntington.